All right, guys, what's going on? Good afternoon, good evening, all. My name is Carlos Garcia, founder and CEO of GAR Capital. Welcome aboard to our market recap that we do weekly. We're going to go over our trades, signals of the week, talk about the week upcoming, and preview what else is to come. Definitely review what we did right, what we did wrong, and what we can do to be better moving forward. Again, thanks again for joining us. And if you haven't already, make sure to hit that subscribe button on our YouTube channel, little bell notification icon. Click on that, turn on notifications if you haven't already. Again, good to be with you this afternoon. Just a heads up, I will not be in the office Monday and Tuesday. I'll be out for the weekend, enjoying a much needed vacation. I'll be rested and relaxed, back on it on Wednesday. Any questions, garcapital@gmail.com. Our staff will be more than happy to help you. And again, if you're on the server, we have our staff there to answer any and all of your questions. All right, let's go ahead and begin. Let's go ahead and start with how the day closed today. The Dow closed up 113 points. Majority of that was UNH, United Healthcare, JPM helping, Microsoft helping. You can see UNH, Microsoft, JPM were all green. The NASDAQ was down 0.18%. The S&P down about 0.10%. Equal weight S&P down about 0.59%. So held up by a couple of names on the S&P today. The VIX, again, another Friday, another VIX crush, 1334, down about 1.98%. The dollar dead cat bounced, like we talked about this morning on the morning note. If you haven't seen that video, feel free to take a look at our channel and check it out. Nice dead cat bounce on the dollar, again, 99.96. The Russell was down 1%, 1943. 10-year Treasury yields bounced 3.819%. None of this was really a surprise. Tend to be expected. So let's go ahead and call the week out in terms of how we did. Don't call it a comeback, because last week was a different tune in terms of recapping the week, right? It was a tough week. Came back with a vengeance. Let's go and expand this out. We're going to start with options. Here we go. Let me see if I can change the view here and kind of zoom out a little bit. We'll do the 75. That might be a little too small. I'm going to put 85%. I think 85% sounds about right. 10 for 10 week in terms of trading. Perfect across the board. We filled a trade every day except for the 11th of July. That was the only day we did not fill a trade. We filled on the 10th, the 12th, the 13th, and the 14th. And we held some risk over the weekend last week. On the 7th of July. You can see it here: Mara, Square, DraftKings, Caterpillar, DraftKings again, JP Morgan, Metaverse, Shopify, Amazon, PayPal, and AMD we hit today, which was nice. That hit as high as 100%. If you guys remember the week before, how tough that was, and want to see if we made back what we lost last week, here we are. Here was the math. Again, you could see here, based on the trades that we had, the $500 risk, we were down 1132. That's not including runners, mind you, not including runners. This setup here, again, $500 risk per trade, based on the exit that we had, that we sent out on the Discord, 1825. So we are up just about $700 in terms of last week to this week, including no runners. That means you didn't hold any kind of run. You just closed exactly when we close, which is completely fine, but you are up very, very nicely. Let's go to the month, and we'll zoom this out too. And you can see $705 profit based on everything here that we traded. We are 16 out of 20, 16 winning trades, 4 losses, 80% win rate for the month of July. That's how you come back and become resilient, sticking with it, because good and bad days happen. It's what you do to respond to those tough ones that really sets you apart, or you could do this for the rest of your life or whenever you want. So let's go ahead and go over each of the trades. Mara, we'll go step by step. So here's the chart here. Let me go ahead and actually minimize this here. Okay, so we can take a look at each chart. Again, this was sent on the Discord. If you haven't joined our free market blog, take a look at that on our website, www.gar.capital. We'd love to have you on board. All right, let's go ahead and recap. Mara, again, we got the breakout that we wanted right here at 18 and a quarter. We had the 17 calls from last week. We had the break above 1562. Well done. We got to 18. This one was a little bit of a dogfight to get there. Pulling back from that resistance break. Again, I expect the market to pull back and go sideways for the next 2 weeks. So again, this is all expected. So Mara, we'll take a look at the hourly. Again, we filled last week, Friday. We got the break that we wanted, pulled back. And again, it's just been an escalator up and then a pull back down. Still holding that 50 MA on the 1 hour as support. Again, more than likely, Mara will bounce. Again, it doesn't run with the S&P. Got as high as 1988 in terms of the runner that we sent, or the actual trade. We had the 17 calls for this week. So again, that ended up in the money. Let's go to Square. Square, we traded the gap fill that we had. This was the gap fill. You can see it here. We filled it. We're looking for the hourly because we can go by when we filled. On Friday, this is the level we wanted to break. That yellow line, we got out. We also had a gap to fill here. We finally filled it, and then we just continued to go higher. We had the 70 calls for Square. They ended up at the peak of 77.35. I don't know how high the runner went, but you're talking about 10% above, deep in the money. So we filled Square, just to give a little bit of a heads up. The 70 calls, we filled it at 97 cents. If we just go to a quick chart to see how high it did go, let's check it out. We're going to go ahead and detach the gadget. Here is the actual chart of the option itself. Now we can actually say the bid-ask price. We got as high as $6.98. $6.98 was the peak. We got in at 97 cents. If we do the math, because I'm lazy, 6.98, we got in at 97 cents. The peak was 619%. 619%. I don't know if that was the trade of the week. The Shopify one was pretty good. So probably Square would be the trade of the week. Beautiful break of that line that we had of resistance. You could see it here. Got that break above the moving averages. Got that gap fill exactly how we wanted. That was one of those trades dreams were made of, and we had to wait on that. It's not like it was a quick one either. What else we got in terms of trades? We also had DraftKings, another one that we hit a couple of times. Same deal, nice gap up. Now we're at 30.55. Let's go to the hourly. And we got in, this was on the 10th, which was Monday. Got the break above the yellow line. Again, the yellow line being our resistance that we had and drew. You can see it there, 27.99. Once we got to above 28, that was right here, right around January 2023 highs. So again, new 52-week highs for DraftKings. We do have a gap up, so we may fill this gap here down to 29.28. Going back to it, Monday, we got the break. We continued. We played the 28 calls. It's at 30.58. Got as high as 31.71. Excellent, excellent work. It was so nice that we hit it twice because we also had the 28 calls in the money, and then we also had the 30 calls in the money. As you can see here, pretty much easy setup, easy breakout, got continuation. What more could you ask for? Caterpillar. Same deal. Yellow line, doing the charts over the weekend, getting ready. And you could see that was our resistance that we were looking for, right around 248. Got the break, got to 255, actually 257.51. Deep in the money with a 250 calls at 247. Let's see how high they went with a 250 calls. We can draw here our quick chart. We'll go ahead and expand. Delete. Oh no, we want to go back. We're going to go ahead and expand the gadget. So we're going to go ahead and detach. Here is the Caterpillar 250 calls. Again, you can take a look here. 250 calls filled at $2.47. Here's how high we got. We got as high as 782. So if we did the math, 782 with the entry of 280. What was it? 257. Let's see. The entry was 247. 247 to $7.82 at the peak. Came out to 216% on Caterpillar. And that was the peak that we got written down here, 216%. We closed at 40, left a runner. So again, I'm not counting runners. JPM, this one hit 30% ahead of earnings. We wanted to play the run up. They did beat on earnings. I held it deep in the money. Oh, sorry, this is not the one. I held it at 150 this morning. Got around this morning right around 152. I closed out for 40%. I didn't close that signal with the team, but everyone else got it. So I got a little more points. Not the best, but either way, I thought we would get a nice boost. But we still went high, about 0.60%. 149.57 was where we closed. We got in at $1.60, $2.05, 30%. We got in, what was the date? The date was the 12th, so 2 days before, so Tuesday, which is what we were looking for. We got as high as 154, another great trade. And again, just going by our charts, seeing that breakout here from the March highs, retested those. This is the March 22 highs, and then we got to the March 23 highs, and we finally broke out. JPM has more room to go. We have a gap to fill at 166.87. Remember, the banks have not gotten a lot of love lately, so again, I expect at least the banks to outperform a little more. So we're going to keep an eye on that. Metaverse, we traded last week. We knew where we were going. Here's the gap fill. The gap has been filled, I believe. Yes, it has. So that gap has been filled at 316.64. We had the 310 calls, I believe. We had the 315 calls. There you go. And at 259, 363 got as high as 170%. Shopify was a nice one. We got as high as 421%. Almost the best trade of the week, but that is going to go to square. Let's take a look at Shopify. We had the 70 calls for next week. And pretty simple stuff. Very similar to what we did with DraftKings and Mara. We had a gap to fill here at 69.20. We played the breakout right here at 65. I believe we filled this one yesterday. Beautiful breakout at 64.91. Got as high as 71.43. I even traded this again with Masterclass on the 75s, and they caught that here as well. Here you go. That was I didn't send a screenshot of Shop. It doesn't matter. But Shopify got 35%. I told everyone to take it, so I just forgot to take a screenshot. That's my fault. But Masterclass got that a little extra. Shopify only took it for 30, got as high as 421. Wanted everyone just to make some money yesterday. That was on the 12th. Again, we saw what happens when we got pushed higher and then we got reversed on. So it was more about to be careful and take the money as we got it moving forward. Amazon 135 calls. Those soared today. We got as high as 136.65. And again, we got out for about 25%. I told everyone to take it at 25% yesterday since we were so green. But again, I held the Amazon trade, and you could see that's the AMD trade. Here is the Amazon. It was in the money, and 42%. I showed them that. But I actually closed it at 56. I just didn't get a screenshot on it. PayPal was another one. PayPal, I'm very glad that we took. We got 20%, but again, it wasn't doing the best price action. It got as high as 30. We still have a gap to fill, so again, we can always keep an eye on PayPal. Not like the trend was broken. Again, we're still above major moving averages, but again, 75 is the target. I just wanted everyone to get paid this week, and I'm glad that we did. 20%, and then we got reversed on. But again, we closed out for 20% on PayPal. Everyone else did. So I wanted to make sure everyone got it. Again, I had it personally, but again, I was closing up risk before my vacation. I took it for about 38% or so. AMD was the trade of the day. We got into AMD calls this morning, actually. Let's see, AMD, and what a candle. We got in today, and you could see the pop. We got the break of the yellow line, which we wanted 116. Got the pop higher to 122. We had the 120 calls for next week. We got in at $2. Got out at $2.40. I held this one. I knew we were going to run, and you can see we got as high as 408, 120 calls. I got out at 101.98, and Amazon right here, 53%. I told everybody. So we caught that, and I'm glad we did because, and I told everyone I got out on the blog all my positions. You can see that reversal. So let's see exactly how long did that trade take on AMD. AMD, we got in at 9:44 in the morning, got out at 9:55 in the morning. So about 11 minutes. And then to get to 100% was about 45 minutes. 9:44 p.m. a.m. excuse me, to 10:15 a.m. and you can see at 10:17 is where we got the bag. I call it that. So right around a 30-minute trade for about a bag. Those are beautiful, and I'm glad we got that one because AMD reversed. And if you go to the blog, so you guys see, here we go. Started sending some stuff. Okay, I said at 10:27 a.m. right when AMD was closed, I said, okay, guys, I'm all out of risk in terms of trading. I don't have runners or anything. I'm on vacation until next Wednesday, so I'd rather be clean with zero risk and back rested and relaxed. And just about that time, right when we got to around 11 a.m., that's where we started pulling back. So sometimes it's good to just take some profit. If you remember this morning, I said, if you guys want to take profit, now's the time. So again, 10 for 10, excellent work. Very, very proud of the team. Couldn't ask for a better week. That's the resiliency of coming back and doing this every day and just focus on getting better. And the market doesn't change like we talked about. It's all about how you get better as a trader. So 80% win rate, that's about the mean that's our average. So it's kind of good to get back to the mean. All right, now we can start previewing next week. Let's take a look at the S&P 500. I did send out this tweet, but I also put it on the live market blog. And I said S&P starting to hit that zone of resistance March 22, which is 2022 highs, and September 2021 highs. 45.50 to 46.25. You're going to need a stellar earnings cycle to break it. And I am of that opinion. I think when we did pull back today, again, this is completely healthy. We need a pullback, guys. It's the RSIs like we talked about this morning are just way overstretched. So let's go ahead and add those RSIs again. We're going to go to momentum studies. We're going to go to RSI. And again, still overbought, guys. So again, we're going to get a pullback, I believe, to 44.53. That's your 20-day moving average. That seems to be that level that we've been holding, again, really since mid-May. That's the last time we broke below it. So I think that by the next 2 weeks, we'll go ahead and get to that 20-day, see if we hold. The key level for us in terms of support is really 4,400 for us to stay in this kind of bullish trend to the upside. But even if we get a pullback, again, very, very healthy. I went ahead and marked this here as our zone of resistance. If we start breaking out, okay, different ball game. I already said we're going to go to all-time highs this year. I've repeated that many times. But again, this is short-term moves. End of July tends to be pretty weak. Mid-July tends to be pretty weak seasonally. And again, we're going to reinforce that point by staying short. We went ahead and shorted on futures this afternoon, and we are green on ES and NQ. We're also green on our euro dollar short. I am not in any of those trades just because I'm on vacation, but I do like the setup. So ES, expect more weakness. Let's go to NQ. This is NASDAQ. Again, very similar zone of resistance, right around 15,700 to around 1620. So that's about 300 NASDAQ points of resistance. Doesn't mean we can't get inside it. I don't think that we're going to break it for now. I think we're going to test that 20-day moving average just like we did on the S&P. That gets us to 15,251. Right now we're at 15,693. So you're talking about, about 400 points of possible downside, 450 points of downside that we can get on NASDAQ. And I think we can get it. Again, a retest of the 20-day, just like most bull markets, we want nice, consistent uptrends. This is what we want. See how May went, see how June went, see how July is going. Nice, structured, holding moving averages, holding support. Again, we're a little overbought. We can be more overbought, but again, usually this is where you start getting a little bit of a selling of some assets and some profit taking across the board. Take a look at SMH. This is the semiconductor ETF. You can see that shooting star candle, right? Getting that reversal candle right at the top. Yep, we'll probably get some weakness. And NVIDIA, another one that has a shooting star candle. We have a gap to fill down at 319. I don't know if we get there, but I'll say that we'll test 426, which is the 20-day moving average. The question is by when? That's always the problem. When are we going to get that? And of course, NVIDIA is overbought. AMD is not overbought, but again, a very similarly ugly candle. This is basically what we had towards the end of the session. And again, I expect us to have continued weakness in equities because of this dead cat bounce on the dollar. What is the dead cat bounce on the dollar? You could see it here. We're starting to bounce back on that RSI. See, we're at way oversold conditions on the dollar. 52-week oversold conditions. So again, I expect us to start bouncing, getting above 100. That's going to affect equities like we've talked about. If we even stretch this pattern a little more, you can see that we're a smidge above the 3-year lows of the RSI reading on the dollar. It's been absolutely smoked. I know the dollar will continue to go down personally. That's what I think. But again, a breather is definitely needed. If you're talking in terms of a target, look at that here, 98.20. That is the 200-week moving average on the dollar. That'll be our target eventually, maybe by the end of the year. Once we get there, the 200-week moving average has not been broken below since 2021. So I think we'll break that this year. But again, that might be a zone of support as well. So if the dollar's bouncing, we know what that means for equities. That means equities are going to slide a bit. It doesn't mean we're going to get limit down. It doesn't mean we're going to get a crash. It just means that we're just going to get a nice pull back. Some numbers on that. Let me see if I have it here. Again, I put it on Twitter. Let's see. Here we go. Last time the S&P was this overbought was June 16th of this year. 44.93 peak, 43.67 on June 26th. That took about, what, 9 days? So the index, that was for about 7 days, about a week. The index pulled back about 2.8% in that week before bouncing for the end of the month rally. So again, we can kind of see the rinse and repeat of the market here. I think we get a pullback short term. We'll test that 20-day moving average of, again, I'll reiterate the points here, of around 44.53 on the S&P 500 futures, and on the NASDAQ, that gets us to around 15,260. Now, the NASDAQ may hold up a little better if the dollar tends to chop a little bit. Maybe we get a little bit of relief with yields, 10-year treasury yields or interest rates. That may or may not happen in terms of that 20-day, since we're so high above it on the NASDAQ. But again, we are overbought, so we need to be careful. We need to be keeping our bear hats on. That's why I said earlier today, take some of those profits today, because we're going to get a pullback. And again, I kind of hope I'm wrong, because if we soar, that's a good thing, obviously, but I'm just talking about the mechanics and the structure of the market. A couple of things I'm looking at moving forward, but again, I'm off for the week. I did keep an eye on Tesla. Tesla is breaking out. You could see this trend line here, very much respected and breaking out now, 285. We closed at 281.05, so again, that breakout did settle on the daily. Good news. Bad news, we got a couple of gaps to fill down, but the other news is that we have earnings on Wednesday. So you're going to get some kind of move here. Either we're going to break out to 314.48 or we're going to fill a gap to 240. That seems to be kind of the binary move. Again, I won't trade the earnings on Tesla. I'll keep an eye and see if we can react to it accordingly. That'll be on Wednesday after the bell. So Tesla definitely on the radar. But for the most part, we're looking at the indices. We're looking at the stocks that have, really cooked up higher. Nvidia will definitely be on the watch list, I believe. So we'll have Nick actually do the watch list this week. He does it every week as well. So keep an eye on that premium and masterclass members so you can see what we're looking at next. All right, well, guys, we'll wrap up here with the week that we're going to have in terms of economic data. The G20 meetings are on Sunday into Monday. Into Tuesday. Core retail sales on Tuesday at 8:30 in the morning. Again, the expectation is 0.4% positive on the month-to-month basis, and the retail sales 0.5% on a month-to-month basis. We'll have unemployment claims on Thursday, Philly Fed, and existing home sales. Not a lot. But the week after is where it gets important. We have the new home sales, we have the FOMC, GDP, and the core PCE with some PMI. So next week, pretty quiet in terms of the economic data front, but we do have earnings. Earnings we have that stands out. Bank of America, Morgan Stanley, Lockheed Martin, Tesla on Wednesday, Netflix on Wednesday, IBM on Wednesday, ASML, that is the semiconductor company, Abbott, Goldman Sachs on Wednesday as well, Las Vegas Sands, US Bank Corp, Cintas, Discover, United, Delta reported earnings today as well, and they beat. Taiwan Semiconductor, Johnson & Johnson, Capital One, Blackstone will also report, American Express towards the tail end of the week, Regions Bank, and Schlumberger. The week after, again, the Fed week, we have a lot going on. Microsoft, Alphabet, Visa, McDonald's, Verizon, Meta, Coca-Cola, T-Mobile, Boeing, Shopify, Amazon, ExxonMobil. So I'm kind of glad that I'm taking the vacation now so I could be ready for the FOMC the week after. So kind of a perfect timing since we'll have that gauntlet. The only thing that will not be reporting that week will be Apple. Apple reports in August. So July 24th, big week for earnings, big week for the markets as well in terms of economic data, FOMC and the macro. But the week of July 17th, which is coming up, yeah, we got some notable earnings, sure, but not a lot in terms of economic data. So I think that's going to add to the choppiness to the downside with equity. So that's what I'm expecting this week. Resiliency, that's the deal. Coming in, day out, putting in the work, doing the research, changing things up. What does that mean? Changing your perspective, kind of really putting your focus on things, focus on setups. What I did the last weekend was really focus on the setups and what I wanted to do. I wanted to see the game plan of, okay, if we go higher, PPI, CPI, I was ready to go. I blocked out my schedule the way I wanted to and just prepared myself that way. And again, guys, 10 for 10, you can call it luck if you want. That's fine, but luck is only preparation meeting opportunity. So I'm very proud of the work we did. It shows the resiliency of our team and our members, and we're only going to get better moving forward. So let's go ahead and prepare for that over the weekend. I will be out again, so I will see you guys on Wednesday. Thank you again for joining me, and I will see you guys next week for the morning note and the recap as well. Cheers.